Sensex and Nifty declined for the sixth straight session, the longest losing streak in a year. Nifty ends at a two-month low, falling below 25,000. Foreign investors sell stocks worth nearly $1 billion, taking their total sales over the last 5 sessions to more than $5 billion. Wall Street closes lower as the 10-year bond yield rises above 4% to its highest level since August. Higher oil prices also weigh on market sentiment. Asian markets trade largely lower following weak cues from Wall Street, but Chinese markets open sharply higher. The GIFT Nifty is also suggesting a lower start for the Indian market. Crude prices continue to surge. Brent tops $80 a barrel on apprehension over Israel's response to Iran's missile strike. Gold prices hover around $2,650 an ounce. The India Business Leader Awards jury, comprising top business leaders, brainstorm India's growth prescription for the next 25 years, bat for an innovation-driven economy, higher private capex, more infra and healthcare investment along with skilling for the future, call for India to become a product-driven nation. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines. But of course, the biggest headline is what's happening in the Asian markets, especially with the Chinese markets. They opened after an 8-day break, and today that index is surging around 7%. So big moves coming in on the Chinese markets. But if we look at the other Asian markets, remember the handover coming in from the US markets was weak. And that is something that we are seeing in the rates as well. Look at Hang Seng. It's down 5% right now. We have the Taiwanese index, which is sitting with cuts of around 0.8%. And that's the case across the board. Even Nikkei is down 1%. So Shanghai, that's the only green-looking market today. And that's after a break that I just told you about. So it's up around 6%. At a point in time, it was up 10% as well. But if we look at the GIFT Nifty, because that will indicate the moves for our own markets, and that one is implying an open in the red. It's down 120 points right now. So it looks like the fall that we saw yesterday, that could continue today as well. And this is coming after that big FII selling that we've been seeing in last couple of trading sessions. But that's about the Asian markets. Let's talk about the US markets, because Wall Street ended lower as the Dow lost nearly 400 points while the S&P slid close to 1%. Technology stocks felt the brunt of Monday's decline, pushing Nasdaq down about 1.2%. The 10-year Treasury yield climbed above 4% to touch its highest level since early August. And let's stay with Wall Street. Let's listen into former CEA chair Jason Furman to get his view on inflation as well as Fed's rate cut outlook.
In terms of the number, yeah, it really changed the narrative that had been established 2 months ago when we saw the unemployment rate spike. There always was some temporary noise, temporary layoffs, hurricane, et cetera, going on then. And with 2 more months of data, the labor market looks, full speed ahead. It went from, is it going to be 25 or 50 at the next meeting, to is he even going to cut rates at the next meeting? Inflation is still way below where it was a year or 2 ago, and so rates should be way below where they were a year or 2 ago. So I'd like to see him continue cutting, depending on what the data shows. But there's no reason at all that needs to be a rapid process.
All right, that's global market action, but how will overnight cues impact our own markets? We have our research team joining in to tell you just that, the trade setup, the stocks in the news, and the action from the F&O space as well. So let's start with the F&O space, because there will be a lot of action and cues coming in there. Mangalam is joining in with those cues. Good morning, Mangalam, and happy birthday.
Well, thank you so much for that. As far as the markets are concerned, the sell-off continues for the Nifty as well as the Sensex. The broader markets have it even worse. So we'll just keep an eye out on the way the Nifty Next 50 and, the mid-cap index as well as the small-cap index did decline in yesterday's trading session. The market breadth firmly in favor of decliners. Over 10 stocks in the red or just 1 stock in the green as well. And the GIFT Nifty indicates a sharp downtick at the start as well. And that leads us to the cues that we need to track for today. There was a sharp sell-off on Wall Street overnight as well, over 1% shaved off the frontline indices. The Chinese markets have opened today. Hang Seng is down 5%, but the other indices are higher as well. And then you'll have domestic cues like the Haryana and J&K election results with the RBI policy tomorrow as well. The one imponderable is the FII selling in the cash market. Yesterday too was a near $1 billion worth sell-off, and over the last 5 trading sessions, the average daily sell-off has been close to around 10,000 crores by the FIs. The good part, however, was the DIIs more than bought the FI selling yesterday, 13,245 crores, telling you that the net institutional flow was on the positive side. The FIs have been selling lock, stock and barrel index futures as well. Yesterday was no different. Nearly 8,000 crore worth selling out there, 45,000 long contracts being unwound, 72,000 short contracts being added. The question is, is this getting overdone at some point in time or not? Because the FIs now, they've turned net short in index futures. From the start of the series, where they were around 3.4 lakh contracts on the long side, they've now turned into 35,000 contracts on the short side. Long exposure has fallen from 81% to about 47% itself, making the FII net short by about 53%. So that table comes up for you. The important part, however, is in the very near term, the locals have a pulse of the market a lot better. And out there, we've seen the clients, the HNIs, actually buy all the FIIs selling. Their long exposure has increased from 37% to 58%, and net longs have increased to 1.15 lakh contracts as well. And finally, the put call ratio for October is 0.6, 0.58 to be precise. Usually, we see the market, bottom out for the near term and see a bit of a bounce as soon as the put call ratio nears that 0.6, 0.7, 0.65 mark. We're at all oversold levels with the GIFT Nifty indicating a 100-point downtick. Let's see whether we see a bit of a bounce in today's trading session.
Okay, so it'll be crucial to watch out for the levels today. Thank you so much, Mangalam, for joining in with that. Let's talk about all the market cues. Winnie is joining in with that setup. Good morning, Winnie.
Good morning, Sonal. And what we'll watch out for, like Mangalam was also mentioning, that we've seen that Nifty see a fall as well, 6 consecutive day of fall for the Nifty. Volatility index that yesterday actually nearly rose to 7%, which crossed that 15 mark for the volatility index as the India week. So keep an eye out on that. What is the trend today? We are surely going to be keeping a close eye on that, because when you're looking at it, the FIs they continue to sell for the 6th consecutive day. So that is important in terms of a number. If FIs continue to sell, what are we watching out for on that front? Even though yesterday DIs managed to buy more than the FIIs what they sold in terms of a number, keep a close eye on that. Top losers yesterday, what we saw in the Nifty 50 also came in from some of the Adani names. Adani group stocks clearly saw some bit of a selling. Adani Enterprises, Adani Ports, that was down 3 to 4%. We've seen NTPC, BEL, SPI and HDFC also among those losers in the last few trading sessions. Important cues to watch out for. Global market, what we're seeing from the Wall Street, a bit of a weakish handover that we're seeing. Wall Street had seen a bit of a fall. So whether you look at Dow Jones, Nasdaq, that ended in the red. Oil prices, they have also seen an increase overnight. So keep an eye out on that and how they impact companies that are using crude derivatives. So important to watch out for that. Chinese market, they have reopened today. Any moves in terms of Chinese market is a key factor to watch out for. Nifty implied open, GIFT Nifty as of now indicating a bit of a red start for the Indian market. So key to watch out for that.
All right, thank you so much for that, Winnie. Let's talk about all the stocks that will be on our radar today. Vamakshi has that list. Good morning.
Well, good morning, Sonal. Let me first start off with a couple of Q2 updates. The first one coming in from Nykaa. They saw a net revenue growth of mid-20s in the second quarter. Fashion consumption, however, was subdued. However, the company expects to see gradual recovery in the second half on account of the festive season as well as the wedding season. Soba too reported its Q2 operational update, wherein the total sales value was down nearly 37% sequentially and was down nearly 32% on a YOY basis. The average price realization, even though was down 20% sequentially, was up nearly 24% on a YOY basis. Moil has registered the best September production and sales, and in fact has achieved a 7% production growth during April to September 2024. Apart from that, keep an eye out on HDFC Bank. The board has approved sale of 100% stake in HDFC Education to Vama Sundari for 192 crores. High-Tech Pipes Limited has launched a QIP with a floor price of 194.98 rupees per share. Bharat Electronics has received an orders worth more than 500 crores, and now with this order coming in, the accumulated orders total 7,689 crores. Nuvoco Vistas has secured key limestone blocks in Rajasthan. The blocks have limestone resources estimated at 28.43 million tons. Heidelberg Cement has clarified on the news article which appeared yesterday about Adani eyeing a 10,000 crore buyback. The company says that they are unaware about any such development. Purvankara has bought 3-acre 4 guntas of land parcel in North Bangalore to develop a residential project. And finally, let's focus in on HEG. They've acquired an 8.23% stake in Graftech International for 249 odd crores.
Okay, all right. Thank you so much for that, Vamakshi. This is our Power Prep segment. Thank you guys for joining in today. Let's slip into a break now. Up next, the RBI's Monetary Policy Committee meeting is currently underway. We'll get you all the key expectations after this short break. Stay tuned. Welcome back. Well, the RBI's MPC meets on the backdrop of rising geopolitical conflicts and aggressive rate decisions by global central banks. Ritu brings us the whole picture of what the CNBC TV 18 poll suggests.
Steep rate cuts by major central banks, rising geopolitical tensions and a revamped MPC. It is going to be an interesting backdrop to this policy meeting. Now, we first asked respondents if the recent rate cuts by the US Fed in China are going to influence the MPC's decision, and a solid 80% said no, expecting the RBI to stay focused on domestic factors. As for the RBI governor's tone, 40% are expecting a dovish tilt, but the majority, 60%, still says the tone will be absolutely even, with no clear signal of a policy pivot just yet. What also makes this particular policy more exciting is that it is probably the first meeting of the MPC this year where at least a part of the financial markets are expecting a change in stance, and a very small number even a rate cut. Now, half the respondents are expecting the MPC to shift the stance to neutral in October, while 30% expect it to be retained at withdrawal of accommodation. As for the timing of the stance change, while 50% say it will happen now, the rest of them are forecasting a shift only by December or perhaps even later. On rate cuts, 10% are expecting a 25 basis point cut this time around, but the larger majority sees a status quo because they say the MPC will remain cautious because of food inflation risks. Now, most economists believe the window for a rate cut will open only by December or perhaps even later. On the total quantum of cuts in this entire cycle, 50% see room for a 50 basis point cut, while the remainder are divided between 60 to 100 basis points. Inflation is expected to dominate the governor's address, with 80% saying that the CPI forecast is likely to be left unchanged at 4.5%, although 20% do foresee a slight cut as inflation in the second quarter is expected to marginally undershoot RBI's own estimate. On growth, the economists are pretty split. Half are expecting the forecast to be left unchanged at 7.2%, while the rest expect a downward revision pointing to weaker momentum in the key economic indicators. And lastly, this is the debut meeting for the three new recently appointed external MPC members, Professor Ram Singh, Saugata Bhattacharya and Dr. Nagesh Kumar, and 40% of our respondents believe that the new members are more likely to lean towards maintaining status quo, although some are of the view that there could be one dissenting vote, which should come from Saugata Bhattacharya, citing his recent paper in August making a case for a rate cut. But of course, we'll have to see how the views have evolved since then.
Okay, that is the big event we'll be watching out for tomorrow, and you have to stay tuned to CNBC TV 18 for all the updates and the analysis. But moving on, the jury for the 20th edition of the India Business Leader Awards met in Mumbai last evening. The 11-member jury was led by Bharat Forge Chairman Baba Kalyani. They picked the winners for a variety of categories covering business, public service, sports and entertainment. The winners will be announced on the 7th of December. The jury held a robust discussion on each category in a meeting that lasted nearly 3 hours. CNBC TV 18's Shireen Bhan sat down with the jury members after their deliberation to discuss the growth prescription for India over the next 25 years. When asked what India needs to do over the next quarter of a century to become a developed economy, the jury came up with several interesting ideas. Take a listen.
Manufacturing sector coming anywhere between 20 to 25% of the economy. You're looking at a manufacturing sector which is going to be 10x of what it is today. And we are already beginning to feel the surge. Although there are a lot of, let's say, headwinds in terms of the geopolitical tensions that are taking place, the entire Middle East war, the non-ending Russia-Ukraine war, and of course the new China versus the rest of the world campaign that has started. But this puts India in a very good spot. If we can get things right in the next 5 to 7 years, nobody is going to stop India.
For India to be competitive, it's very important that the infrastructure is built in a competitive fashion. When I talk about competitiveness, it's not the lowest costing infrastructure, but the quality of the infrastructure, the life cycle cost of infrastructure has to be kept in view. I don't think as a country we have yet given enough importance to quality. So I think what we need to focus on is good quality in good time.
So definitely we need more investment in healthcare. And I keep saying that over and over again. The reason is that, we know the size of our population. The disease burden could be up to $3 trillion by 2035 if we don't do it now. So there is a huge urgency in building out infrastructure. Second, access through insurance, which is happening, but so much more that can be done. The third is to look at the quality of life.
I think digital is just one element of the whole thing. It really comes down to the basic aspects of confidence linked with ambition. If confidence links with ambition, you will get dramatic growth. And I think that's what we've seen in India, but I really think it's the beginning. India today is far more confident than India has ever been. That linked with ambition and setting the mindset where you think about the global stage as opposed to the local stage will just take us to a completely different level.
Okay, all right. With that, let's move on. Sources tell CNBC TV 18 that the Central Consumer Protection Authority has issued a show-cause notice to Ola Electric following a wave of over 10,000 complaints received on the National Consumer Helpline. Shivani is joining us now on the phone line to tell us more on this and the company's response. Good morning, Shivani.
Good morning. Well, yes, absolutely. Sources have told CNBC TV 18 that Ola Electric is facing serious scrutiny from the Central Consumer Protection Authority, CCPA, following a surge of complaints from consumers. Now, what we are learning from sources is that around 10,000 grievances were lodged against electric vehicle maker on the National Consumer Helpline, with consumers citing service delays, issues with refunds, and overall dissatisfaction with the company's after-sales service. In response to these widespread complaints, the CCPA has issued a show-cause notice to Ola Electric, demanding an explanation for the alleged deficiencies in service. Now, the authority is investigating whether the company's actions constitute unfair trade practices and potential violation of the consumer rights. Especially and specifically, the notice points out to recurring concerns about delayed services and refunds, suggesting a pattern of negligence that has impacted many consumers. Now, Ola Electric has been given 15-day window to respond to the show-cause notice. Late last night, the company confirmed that it has received the notice and assured that it would address the concerns within the stipulated time frame. Ola Electric also reaffirmed its commitment to complying with the regulatory obligation, stating that it will take the issue seriously and will work towards resolving consumer complaints. Back to you.
All right, Shivani, thank you so much for joining us with all those details. We'll keep coming back to you for more updates. It is an important story, and the listed stock, of course, will be in focus as well. We'll slip into a break now. Up next, we'll get you all the cues from the commodities market, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast. A lot happening in the commodity space. Crude is at higher levels. Let's get in Manisha Gupta to make sense of all the moves in the commodity space this morning. Good morning, Manisha.
Morning, Sonala. Thank you for that. Well, absolutely. The Brent crude prices is trading at a 6-week highs right now. And with the kind of overnight gains that we've seen, we're at $81 now. And this is over and above 9.5% of gains in the previous week. Well, 3 or 4 factors which really are supportive. One, that the Middle East tensions seem to be escalating. While even as President Biden has discouraged strike on oil fields in Iran, but the markets are at this point in time taking in all war premium as it can. Apart from that, China reopens after the Golden Week holidays, and there's an expectation that they could unveil new stimulus. Saudi Arabia, even as has cut oil prices for its consumers in US and Europe, but has raised oil prices for Asia, and that also seems to be supporting prices. Because of the run-up in case of crude, you have seen palm oil prices go to a 26-week highs. Rubber is gained up by 6% overnight. We've seen coal prices gain up by 6% in the past month as well. So most of the commodities which are related to crude oil prices seem to be trading positive.
Okay, so commodity prices have risen. That will be key to watch out for. Thank you so much, Manisha, for joining in as always and giving us those updates. Let's move on now and talk about some national updates. After its single-phase voting on October 5th, the numbers for Haryana's 90-member state assembly will begin coming in shortly, with the BJP's hat-trick looking unlikely as exit polls suggest a win for the Congress in the state numbers for the Jammu and Kashmir as this time as well. For the Jammu and Kashmir Assembly will also be coming in today, and exit polls are suggesting a hung house in the state, with the National Conference and Congress alliance likely to have the upper hand over the BJP. Okay, all right. With that, we'll take your leave on Power Breakfast for today. But stay tuned. Bazaar Morning Call comes up next with all the market action.